Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Emily, we talk a lot about Canadian LPs, and this is something we didn't talk about a month ago when Canopy Growth announced that they're shuttering their retail footprint, their corporate-owned stores. I think it was 28 of them under the Tweed and Tokyo Smoke retail brands, and closing 5 more, ending franchising and licensing agreements in Canada. I think that the Canadian market's been challenging. I think as they're looking at their strategy, certainly, this was a piece that they wanted to divest from. And the reason I bring it up was, this happened a month ago. And then just today, more Canopy headlines, notably around coming into the US in a meaningful way. And maybe, this is part of it, right? It's like, let's get out of Canada in the context of retail and let's look at America in the context somewhat of retail, but also in the context of brands in a big way. And this is what they're talking about, the brands, with the announcement we know about already with Wana, friend of the show, Nancy, and Wana Brands, the deal that they did about a year ago, coming together. Jetty Extracts, also friends. We haven't had Jetty on the show, but, longtime friends, and Acreage as part of this as well. So I want to talk about that today.
Yeah, it was a really interesting series of events because, it's kind of an indication about how one of the most well-capitalized companies that we've ever seen in the industry. And for those who hadn't been following along, they received a $4 billion investment from Constellation Brands back in the day when Bruce Lipton was the CEO. That was substantially a bet placed on the fact that cannabis would largely be entering into the consumer products category and more significantly, their core back focus, which is wine, spirits, and beer. And it's just really interesting to see this pivot, especially given some of the things we've talked about. Like, obviously, we covered off on the Biden news recently and some of the directionally positive things we've been hearing out of the Senate about what might happen in the lame duck session. And last week, of course, the GTI Circle K news. These are all signs that there's some movement going on around U.S. cannabis and the perception that something might be coming. So it was just really interesting to see this news today and the way that the different groups are positioning it. But it was definitely, when I saw the press release first thing this morning, it was about coming into the U.S. to be the largest consumer products focused company in the U.S., which, to your point, Acreage is a vertically integrated operator, and they had a couple of structures in that company. This was kind of a path I saw it as a foregone conclusion that they'd have to end up going this way. But then you have Wana and Jetty, which are 2 very interesting branded products companies as well.
Yeah, the timing is certainly interesting. Yeah, that's a good call out about the Circle K stuff. And one of the things that you and I have talked about with this announcement that happened just a matter of weeks ago from Biden in this 180 days to look to at the scheduling of cannabis and how the federal government approaches cannabis. And we knew that gears are starting to turn. Do you think that this is a direct response to that? I know that this deal is going to take some time. They're estimating a full year to get this done. I'm sure it's quite complex, but is the idea okay, there is a path here because we have something from Biden. We have, rumors about the lame duck session and maybe something with respect to banking. Things are happening. So now let's pull the trigger and start to do the work on this, because it seems like these things were teed up. But it still seems pretty fast, like the fact that announcement happened and then they're like, okay, we're going to do this. So maybe they spent the last few weeks really fleshing out, what does this look like? And I believe you mentioned earlier when we were talking about this that there's a sponsor of this, an unnamed sponsor of this to help put this together. So all these things seem to happen really fast. Or maybe they had this plan ready to go, and then as soon as they saw this headline, they pulled the trigger on it, and now they're moving forward. But do you think the timing does have to do with federal, or was this stuff just happening anyways and they were going to do it one way or another?
I have a feeling it was maybe accelerated by the federal indications of change. Maybe this is a structure they'd already been exploring and contemplating as a way to expedite a potential move into the US, because you're right, it's complex to finalize the transaction on those three different entities, whereas now they're pulling them all into this US based holding company, which to your point also received funding from a Canopy shareholder. It's a 4-person board, which will be comprised of David Klein, Nancy from WANA, and who did I miss? And then this other investor. And so I thought that that'll be interesting because they're going to oversee the operations in the US. And I just thought, to your point, that it was interesting that there was funding that went into this. But I think what that does is then at least those three things are now wholly owned by the holdco, US, Canopy Growth US. Now, the way they've structured all of this is really interesting with the classes of shares and subordinate voting. And I think they did a lot of that to try to create as much separation as possible so that they can maintain their listing on Canopy Growth Corp on the NASDAQ and the TSX, because that does create so much more liquidity around the stock, as we've discussed. So it's just a more efficient way to be in the public market. So I think they did a lot of structuring around this to create that arm's length aspect of it. But it's very clear that they're now going to be kind of consolidating how these businesses are managed and operated in the US. And I think it's really interesting too that, as we talked about, that Constellation is in there. And it was funny, I used to make a joke when they first did the investment into Canopy Growth Corp that I was like, well, it's very clear that this is ultimately going to be coming into the US. And I was like, this is Constellation's attempt to like backflip into a US investment through these, as soon as they like announce these interesting structures around the acreage deal. And so, just knowing that, I was like, okay, this is Constellation's roundabout route to come back to the US. And so here we are today. Although Constellation was very specific to point out they weren't adding more capital to this venture.
Yeah. And I want to talk about Constellation, but real quick on the Canopy USA and that structure, you were talking about the non-voting, non-participating structure. But it looks like one of the things that they're going to be able to do is bring some of the earnings into the Canopy numbers. So they're going to be able to attribute that, which will probably make Canopy look a lot better than they do today. And I want to talk about their brand portfolio, and specifically the WANA and Jetty numbers, and what we kind of see at Headset here, and how that'll impact their sales. But before we do that, Constellation, that was a huge deal when that happened so long ago. That $4 billion investment, it was massive, and it was in the time of exuberance with Canada legalization. The sky's the limit. It's going to be insane, and since then reality set in. And it's interesting, in Constellation's statement regarding this, they mentioned that this move is aligned with their focus on their core beer, wine, and spirits business and the capital allocation priorities. And then they reemphasize their reinvestment in its core business and the return of value to shareholders. They're also giving up their warrants as part of this deal that they say will eliminate the impact to our equity and earnings. So at the same time, Canopy USA is going to help Canopy Growth earnings by incorporating, these assets that they're purchasing wholly now. Constellation's like washing their hands of it and saying, we don't want this stuff in our earnings. It's been really dragging us down. And then in the combination of like not deploying additional investment. So it really sounds to me that messaging is for their core shareholders who probably have said, hey, you spent $4 billion on this, and what do we have to show for it? And you got to continue to double down on your core business and not focus on this category, which I think is a counter narrative to what we expect to be happening over the next 180 days and even beyond, where brands like Constellation will be coming in even more into cannabis. I think the difference here is that they came in early, right? And sometimes it's not always best to be first, right? Sometimes it's best to kind of watch someone go first and then say, okay, I'm going to be second, and I'm going to do it a little bit differently. And so they made their bet, and I'm sure their shareholders would be unenthused if they said, and we're going to double down, and now they're coming to the US and we're going to give you more money to buy these US brands. They're probably just like, okay, we're just going to stand over here now at this point. I wouldn't take this move by Canopy saying, hey, we're not going to support this from a giving you more capital, and we're not going to have, this incorporated in our earnings. I wouldn't think that this is going to be the norm for other CPG and other beverage alcohol. I think it's just a unique experience that Constellation has lived for a number of years and probably it, will be back at some point in some way, but they're not going to spearhead this thing again with how the whole thing played out in the first place.
No, and it seemed like their stock performed well today on the news. So I think that could have been attributed to two things. One, maybe the commitment to focus on their core business, but also the thought that potentially this investment will finally be in the more interesting market for people who invested into Constellation. I think, the other thing is, as we all know, a lot of that money went into building a beverage up there. And beverage is still a small category, but as we know from the headset data, it's a growing category, and it seems to see these interests. I just loved, by the way, the holiday shopping trends report. I was going through that on the plane the other day, and seeing the growth rate over the holidays of the beverages categories and the edibles categories, I think is a really interesting thing, just as a quick sidebar. But, maybe that's where we do finally see the reinvestment, is when they do start to want to pull the beverage story through in the US. But because they are the ones with the experience on distribution of beverage. And so that could be really interesting.
These brands don't have beverage. Like when we,
No.
I want to touch on like Wana and Jetty, both great brands. Yeah. And, Acreage has, some of their own brands being vertically integrated, but not to the name brand value that you get from like a Wana or even a Jetty in California. And none of those are producing beverages at this point. So you've got a big opportunity there in the future. I really don't see Wana getting into the beverage business. It's really not their core. Not that they maybe couldn't, but, I think Constellation could probably help there in the future. And just look to kind of give, listeners a sense, Wana, I was looking at their home markets and I was looking at sales over the last 365 days in headset. And Wana is the number one edible brand in Colorado, their home market. And the deal that Constellation did is they're going to take over that production facility, that grow facility. Wana is in a lot of other markets, and those are primarily a variety of licensing deals. We have a great interview with Nancy, and we kind of touch on that and the complexities of that and why they chose that path. But in their core home market, ranked number one. And, they do really well there. It was about, when I look at the last 365 days in Colorado, they did about 60 million in retail sales. That's, pre-tax, post-discount numbers, like sales at retail. And I compared that to a Canopy Growth brand, Ace Valley, which is like their gummy brand in Canada. Same time period, Ace Valley did $9 million, $9.4 million. So they're really getting a pretty good asset here. And then Jetty is number 8 in vapor pen in California, I should be clear. And California is a massive, massive market and pretty close to those numbers as well from Wana. So some good numbers coming out of those brands, but they're missing things like beverage. They're missing things like pre-roll. They have some, I guess, maybe concentrates from Acreage. Flower brands, are an opportunity. There's all sorts of categories that I feel like they don't have a lot of exposure to. And if they're really doing this brand play, I would expect more announcements coming. And maybe this group that's backing this initiative, maybe they're looking, right? So if you're, a brand right now, I mean, this is a great signal. Like Canopy was an early bet on Wana and on Jetty. And now, that they're actually going after it, I could see a lot of structure where, other companies are out there trying to do the same thing. So if you're up there in the top brands, now's the time where, you're probably taking those meetings.
Yep. Yeah. I mean, Constellation has substantially built their brand by buying high velocity, smaller products, that are really getting, what is it called? Like, there's a phrase for it, but basically that it has a groundswell of interest in terms of whatever that new product is. And so, these consolidator bevel companies acquire those companies. And so ostensibly that'll be one way that they'll build this branded products company that they're bringing to the US. And so if I was a cannabis consumer product company, I would really be thinking about that as an exit I could see on the horizon. So I do think that's really interesting to see what'll happen around that.
And then on the Acreage portion, in their press release about this, it sounded like they didn't have a lot of options on the table. They made a comment about that to continue to operate as a standalone publicly traded company, they're going to need to raise capital because of cash flow requirements and the nature of their business. And the ability to execute on their board-approved strategic plan would require them to raise this capital. And given the restrictions in the existing arrangement and the current market conditions, they thought that this is really they say that it's unlikely that any other party would be willing to acquire the floating shares, which is what they define for what Canopy's taking over, that are more favorable to the shareholders. So it's kind of like, this is a great deal for them, especially in today's climate. So probably a big win on that side there. And I know Acreage has some exposure in what Northeast markets primarily. I think they're got a bit of a footprint in New Jersey with a store too. But yeah, it will be interesting to see. And then there's Terracin too that's sitting out there. It said that Terracin hasn't been, nothing's changed yet with the Terracin deal. But I feel like, I don't know, maybe that's coming next.
Yeah, very interesting to watch. I think, the big question is when you think about Acreage, I mean, I think when they IPO'd in Canada back in the day, or RTO'd, it was like over a $1.5 billion valuation at that time. Crazy.
Just crazy.
That was like major market exuberance at its peak. That was like MedMen, Acreage, Harvest. Where are they all now? But so different times.
Very different.
But, I think one of the big questions I saw a lot of people asking about today is like, is this a path to uplisting? Is this indication, like you were asking at the outset, is this an indication that there is change on the shorter horizon, the closer horizon? And I don't know about the path to uplisting. So, I've reached out to some of my trusted legal and policy advisors on that. But, I know that David Klein said he's been in touch with the exchanges to make sure they're staying copacetic. I mean, I think Canopy had to do this. The company has not been performing well in Canada and they're burning through their balance sheet. So I think they had to make a big move. And so that's where we are today. But I think also, is this directionally showing that they have faith that there is change? And it's a good question. And, on our minds in the US has been the uplisting for these operators. And, a lot of them have been taking the steps to make sure they have the things in place, like GAAP audited financials, a certain type of board structure, all of these things, the transparency and reporting. And so there's more to it than just once the laws change, you have to be set up correctly for the NASDAQ or NYSE to accept you onto the exchanges. So, but nonetheless, we'll take it as a positive, and maybe it is an indication that while we're waiting for the official change to take place at the federal level, private industry is going to lead us. I don't know. We'll see what comes next.
Yeah, to use your words, you did say it's a pretty big move, and I think that we'll see a lot more big moves in the days and weeks ahead here.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.